Hello and welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is the best way for you to exit highly appreciated public or private stocks, cryptocurrency, businesses, save a failed 1031 exchange, so you can defer millions of dollars of capital gains tax, and so you can create and preserve more wealth. Hey, I'm your host, Brett Swartz, and each episode I'm joined by some of the best real estate, financial, wealth, crypto, and leadership minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He's out of the great state of New York and the Long Island area. And he is focused on helping his clients create and preserve more wealth through financial services and sound, personalized, customized financial advice. And he's originally from the Bronx, and he's here to talk about all things truth about inflation, what you need to know, as well as some things that you can take right now, practical steps. Please welcome to the show with me, Rich Kasparian. Rich, how you doing?
Great, Brett. Great to be with you.
Absolutely. Excited to get to know you a little bit more. And for our listeners getting to know you for the first time, would you give them a little bit more about your story and your current focus?
Yeah, sure. Rich Kasparian, our company is Garden City Financial Group. I've been in the industry many years. And my goal, pretty much, and our goal at Garden City Financial Group is not only about looking at upside, because everyone always talks about upsides in the market, but how do you preserve, your wealth going forward, especially in tumultuous times. It's kind of like what we're in right now.
Oh, perfect. Thank you so much for that. Rich, I believe we've all been given certain gifts in this life, and the gifts have been given just to be a blessing and help to others. So I want you to go back perhaps to your younger days in the Bronx, right? Maybe it's the high school days, maybe it's the college days. And I want you to think about maybe one or two gifts you've been given. Some people call them strengths, some people call them superpowers. And what are those gifts, and how does that help how you help and bless people today?
I would say my father was very entrepreneurial. He had a brain that just always kind of kept going, and he was always looking at ideas and thinking about ideas. And I think that sort of takeaway going forward, he had owned some businesses, put me on sort of that trajectory. And I knew coming out of college that down the line, I was going to own my own business. When I got into the financial services industry, initially you're working for people, you're working for big companies, and sometimes you see an opportunity where you could progress going forward, help your clients, and lo and behold, 12 years later, we're in business that long, and that's how it all happened. But I would say, again, that was the starting point. My dad's sort of entrepreneurial spirit, which came down to me.
Fantastic. That's a great spirit to have from a father. I had a similar entrepreneur dad who helped inspire me to own my own business and do things the way that could have unlimited upside, right, and be able to serve and use your gifts at the highest level. So that's really cool. So having the entrepreneur mindset, looking at things in a different way, and that's a great segue to the episode, which is Truth About Inflation, what you need to know. And by the way, you can learn more about Rich Kasparian by going to GardenCityFinancialGroup.com. That's GardenCityFinancialGroup.com. But let's dive right into the episode here, Rich. What's the number one secret to understanding the truth about inflation?
Well, the one secret is, when we talk about CPI or the consumer price index, that people really should understand is inflation high now? Absolutely. We go to the store, we go to the gas pump. Supply and demand is a major problem. But one thing that people don't understand is the calculations and how they arrive at CPI or inflation are basically phony numbers. So for instance, if you looked at inflation over the last several years, it always have seemed to be in that 2.5% range, 2% range. It always sort of hovered in those areas. And a lot of people would ask me, well, how could that be possible? How does that happen? Well, the way it happens is the components of the calculation. If there's a disparity that's big, they just take it out. So, for example, years ago, everyone probably remembers there was a scare in the mad cow disease. So beef had shot up like 25%. Well, guess what was no longer a component in the CPI? Beef. It gets replaced by something else. So the first thing that people need to know is that the number is not completely real. It's a contrived number that's put together. So, let's say now they're saying it's around 7%, give or take, depending on what you're looking at. It's probably higher. Gas is a great indicator of that. And many times we've had these big surges in gas, over the past, say, 15 years. But inflation is 2.5%. Well, how could that be possible? So people first need to understand that the components and how it's sort of contrived is not what it really is.
That makes a lot of sense. Yeah,
yeah.
that's really interesting. So just understanding the true nature of what inflation is, it's not just the 2 to 3%, it's much higher. What do you think the true inflation is? I mean, I've heard double digits, right?
Well,
what are you seeing? What do you feel like what it was in 2021?
Well, if you look at, I guess it was 1980 or 81. I think the inflation then was around 12%, give or take. We also had interest rates, I think, in that time almost 20%, which people can't even imagine those numbers at these points. It's probably is double digits. I mean, at this point, because if you really looked at the numbers, I mean, everyone goes to the supermarket, goes to the gas pump, can't get items for building in their homes. There's weights for everything. So yeah, I would probably say it is probably closer to those numbers. Yeah.
Got it. And so, what can people do about it? Like what would you say is the number one secret for people to fight against inflation or to combat it?
Well, I mean, at the end of the day, you either need to make more, um, get a raise to keep up with the inflation, which is not always the case, um, generate more income. Um, Pricing, there's really not much we can do about. So certainly shortages we can't do much about. The only thing I would say that you can do is you want to try to, in these sort of rocky times, you want to try to be careful with your investments. We often talk about how much did you make in the market when the market was up, or but we never hear the stories about how much things came down, or did you really protect those portfolios or the investments that you had, or that 401k at work? Are you all invested in that one fund that says growth? So I think the one thing you can do is at least what you have either put away for the future, you want to at least make sure that doesn't erode. So hopefully, if we could sort of normalize where we are in the economy, then I think going forward, you'll be in a better position.
Yeah, that makes a whole lot of sense. And increasing your income is one way to do it. The other thing to do would be to net more or defer more tax or eliminate more tax. So, what are some of the best strategies that you found for folks that are trying to build wealth and to defer tax?
Yeah, so there are a lot of investments. Obviously, are any kind of retirement account, IRAs are always good because they are deferring your taxes. Remember, if you have a 401k at work, money is coming out of your check pre-tax. If you invest in an IRA, you're a business, you have a simple IRA, you have a SEP IRA. Again, there's great tax benefits of those. But on top of that, customers will often look for ways to, how can we invest and get more tax deferral? And one way you can get tax deferral is by investing in tax deferred programs. They would give you the upside of the market or potentially a better interest rate than the bank. But at the end of the day, you're protecting the tax portion of it. And a lot of studies have basically showed that if you could tax defer income versus, say, getting that little 1099 every year from a mutual fund or something of that nature, is in the long run, you're ahead of the game.
Yeah, that makes sense. We really like real estate, right? Because you can depreciate assets, and
Yep.
then on an accelerated basis, as well as potentially even offset your income based upon bonus depreciation. And if your spouse can be considered a real estate professional, so this is kind of some extra neat stuff there that you can do. What about deferring taxes? I'm curious. What's the biggest frustration when it comes to your clients who are exiting, businesses or real estate, or maybe even the 1031 exchange? What's the biggest frustration when it comes to capital gains tax deferral that you've seen over the years?
I think when it comes to a 1031, people feel that it's complicated and it's difficult. So they sort of are weary of it. I think that's important. I think when it comes to businesses or selling businesses or real estate for that matter, there's always that tax concern. How do I defer this tax? I know you talk a lot in your podcast about the deferred trusts, which are very, very useful. But it's always sort of always that crossroad, and I think education is the most important part of it. And saying to a person, okay, this is your tax burden. Let's get your accountant involved. We can sit down and discuss it, and there are ways that we could either mitigate it, or number two, if we can't mitigate it, how do we at least going forward try to invest in programs, whether they be tax deferred going forward or maybe even tax free, to ensure that at least the money going forward is sheltered better.
Yeah, I could agree with you more. And it's interesting. We just did a deal for a client out of New Jersey, not too far from you, and they've been a dentist. He and his wife, and who's the dentist, his wife helped run the business for like 25 years, right? And they're selling their practice for about 1.4 million. And their tax liability, I mean, their basis is zero, but their tax liability is about $500,000 to $600,000, right? It's about 40% of their exit. And this is their retirement, right? This is for their kids. This is for their future. And this is like, they got one shot at this, and they gave me a call, and they had never heard of the thing, and they weren't sure of it. And it, their CPA hadn't heard of it. But it was a big, big decision, but they decided to put their trust in the trust in our company, and the tax attorneys who are my business partners to do the deferred sales trust. So I'm curious, from a financial advisor's perspective, right? What's having an extra, in their scenario, $600,000 or 40% more to be able to be diversified, liquid, investment grade securities, live off of that? What could that do for business owners that are in New York or anywhere in that area?
That strategy, I mean, with a financial advisor is a game changer. I mean, it's the whole difference of someone knowing when they can retire. I mean, that really is what it comes down to. In that particular sale you're talking about, that's everything. Because then what we could do on our end, once that's sort of freed up and that burden is freed up, then we could figure out ways to diversify, and more importantly, try to protect downside on the investments going forward.
Yeah, I couldn't agree with you more. And that's the beauty of the deferred sales trust, is that it gives such flexibility. And you nailed it. It's time, right? It's almost like it should be called the time freedom trust or something like that, because for them to net 1.4, essentially they're going to net about 1.4 into the trust, all right? In order to net 1.4, if they didn't have the deferred sales trust, well, they might have to sell their practice for $3 million,
right?
Which they may or may not ever get there. So with the deferred sales trust, they can exit today, which what might take them, another 5 or 10 years, and who knows where their health is at, where the market's at, where the competition's at, where the economy's at. And so they get that time back. And that's the one piece we can't get back, Rich, which is our time, which is also so important about what you do, which is helping to protect on the downside risk, because if you're not protected there, you're having to play catch up. So talk about the importance of making sure that you have a portfolio and a financial advisor like yourself helping to protect on the downside risk, and maybe mention a story of how you're doing that.
Yeah, there's sort of a disconnect in my industry about what protection is, or what downside protection is, or am I diversified? And in the old days, when a person said they were diversified, it basically meant that they had a stock portfolio and a bond portfolio. And, based on their age and predicated on their tolerance of risk, the advisor would basically come up with a percentage. So they would, oh, well, you're going to be in 50% equities and 50% bonds. Well, a lot has changed in the industry over the last several years. And one of the ways we pride our practice is truly protecting downside. So, one of the things I do when I'm with a customer is I tend to work backwards. So, the first thing I would say to a customer in a conversation is, when we're doing a review, how much cash do you want to see on that bank statement? Now, I know this is an odd way of doing things, because in our industry, it always seems to go in the opposite direction. So once you determine that, what is that rainy day cash number that the client wants to see in their bank account, where if they need to dip into it, it's there. And for everyone, that number is different. It could be 10,000, it could be 50,000. We had a client once, it was 4 million. So it all depends on the person. Then we work forward from there and come up with sort of a middle term portfolio, let's say 5 years, and then always then the long term or the retirement portfolio. There are many programs today that didn't exist many years ago that you can protect the downside on your investments. Now, when you said this 15 years ago, people would say, okay, but how much upside am I giving up to protect my downside? And a lot of that was true. It's changed. So you can literally nowadays, with various programs, which we could certainly show, is that you'd have the upside of the market, but then you have downside protection. And the downside can normally come in two ends. The first end is income for life. You can provide income for life with a guarantee, or there are many programs out there now, whether they be structured notes, which are bonds, or annuity type programs, where you have some downside protection, where if things do fall, the house kicks in, and that's how they do it. So there is a lot out there that can be done nowadays to protect those downsides.
Cool. That's awesome, Rich. Thanks. And by the way, you can learn more about Rich Kasparian and connect with him at GardenCityFinancialGroup.com. That's GardenCityFinancialGroup.com. And for those who want to learn more about the Deferred Sales Trust and how to exit highly appreciated businesses or real estate, cryptocurrency, and defer capital gains tax, you can go to capitalgainstaxsolutions.com. Our minimum size deal is $1 million net proceeds, $1 million gain. So it's got to be big enough to make sense for the deal. But you can go to capitalgainstaxsolutions.com to learn more about that. That being said, Rich, we're running out of time. Are you ready for the lightning round?
Absolutely.
All right. Knowing what you know now, if you can go back to your 25-year-old self, what's the one golden nugget you'd make sure to tell yourself to do?
I think when you're at that age, you just always sort of think that things are going to go always incrementally higher. It could be a portfolio, it could be a career, it could be anything. I think you just got to keep always pushing forward, knowing that you're making progress, even if you're taking 2 steps back. And that could be your portfolio, that could be your career, that could be your business.
Excellent. Second question, what's the number one book or you've recommended in the past year?
That's a good question. I'm still sort of old school, and every once in a while I pick up that book, Napoleon Hill, Think and Grow Rich. It's just a classic.
It's a great book. I couldn't agree with you more. Next question, what are you most curious about right now?
I guess, like everybody, we're all sort of most curious as to this year going forward in the market and in the economy. Are things going to open up? Is supply going to be at like where it used to be? But again, you have to protect your investments through all of this, and hopefully on the other side, things will return to where they were.
Fantastic. Last question is this: after all your success helping all the people create and preserve more wealth through your financial services business, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new heights?
I think the way I stay centered and the way we stay centered in the practice is putting your head on the pillow. And at the end of the day, if the market is up, everybody's happy. When the market is collapsing, people are upset and emotional. As an advisor, if I know that downsides are being protected in some way, that's how I do it.
Fantastic. Hey, Rich, I want to thank you for coming on the show. I want to thank you for sharing your wisdom with us. I want to encourage you to keep having an entrepreneurial mindset, looking at things in a different way to help your clients create and preserve more wealth. For our listeners who want to get in touch with you, what's the best place for them to find you?
You can go to www.gardencityfinancialgroup.com. You can click the contact button, and we would get right back to you.
Fantastic. Thanks, Rich, for being on the show. I also want to thank our listeners for listening to that episode of the Capital Gains Tax Solutions podcast. Also streaming on Expert CRE Secrets podcast as well, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, is the best way for you to exit real estate, businesses, a dental practice in New Jersey, cryptocurrency, defer hundreds of thousands to millions of dollars of capital gains tax so you can create and preserve more wealth. You can make time be your friend. You can maybe get some time back and retire earlier, and you can work with professional financial advisors like Rich to help manage the funds as well. Go to capitalgainstaxsolutions.com to learn more about all of that. And also, we want to invite you to our free mastermind. In fact, it's focused on cryptocurrency owners exiting well, diversifying, buying real estate or buying other assets with the deferred sales trust with their exits. And you can go to capitalgainstaxsolutions.com. It happens every Friday, 1 p.m. Eastern, 10 a.m. Pacific Standard Time. And you can register for free on our website. Hey, thanks so much for watching this. Please rate, review, subscribe. Share this with someone who could be of help to